Things are opening up too fast. That's the bottom line. So here we are breaking our record for the number of COVID-19 cases on a daily basis. With the S&P dependent on a handful of companies, rising unemployment, and unprecedented printing of money, both a dollar crash and a market crash is imminent. So you might as well prepare for it. The first tip is start by mentally preparing for it. You're looking at your market investment is probably going to go in half. You're most likely going to lose half of your investment. So your $100,000 stock portfolio, just know when the crash happens, it's going to be worth 50. In fact, certain areas of the stock market, including retail, REITs, and oil and gas producers have fallen that much, if not more already. Of course, even long-term investors know that it's impossible to gain all the time. Just make sure that if you decide to risk it and keep your money in stocks, you can either afford to completely lose a lot of it or you can wait a few years to get it back. The second tip, invest according to your age. Depending on your age and tolerance for risk, it may be an idea to play it safe. If you're really close to retirement, a stock market crash could devastate your savings. And that's why as you get older, it's a good idea to invest less in stocks and be more conservative in other areas. The older you are, the more conservative your portfolio should be, and especially if we're thinking about stock market being very volatile. And maybe the third tip is something we do. Go non-traditional. Invest in metals, gold, silver, platinum, palladium. These are really winning right now in terms of just overall percentages. Metal is an investment that tends to gain value through economics collapse. And I would consider holding something solid as part of your diversified portfolio to combat a market crash and also focus on long-term wealth preservation. Bank of America is predicting that gold's going to hit $3,000 an ounce, which would be an over a 30% gain from where it is today. So that would be a phenomenal return. Even during strong economic times, it's wise to only invest money you won't need anytime soon. But this is really important during market downturns because if you have to pull your money out and you do it at the wrong time, you could have serious consequences. Not only could you lose the money that you're investing, but you could have income taxes, you could have a 10% penalty for withdrawing the money too early. If you pull it out before you're 59 and a half in an IRA or 401k, the IRS has these penalties. So you have to make sure that you're ready to do it at the right time. So focus on protecting yourself, getting into safe investments, and so you can ride the wave of this economic downturn. You're interested in precious metals, but you don't know where to start. Our commitment here at Noble Gold is we pride ourselves on education. We pride ourselves on giving a lot of information and getting people the right kind of education on what we do. We have hundreds of free guides. We have teams of people that will answer any question that you may have. And we're really here to help in a no pressure environment. So if you want to learn how you can acquire some precious metals or just get some information for free, contact and look up noblegoldinvestments.com.